for joining our room. We will be just waiting on our speaker for today. Joe will be joining the session in a moment, and then I will let him take it from there. But for now, just sit tight and we'll begin momentarily. There he is. Hi, Joe. How are you doing?
I'm well. How are you?
I'm good. I'm good. Here, let me send you.
The rooms does not become available until like right, at the moment of 12:30, and even then it's like you have to almost like refresh to take a look at it. But
Yeah, sorry about that. It
we're
was
we're
it
in.
was I could have started it 10 minutes ago. I was just in another meeting, so I had to jump from there to here. Are you getting my host request?
Oh, yep.
Okay, perfect. Okay.
Okay. All right. Well, Aaliyah, thanks for setting this up, and I'm really excited to host this room because it's an opportunity to really learn from each other, both on the real estate side, and then also for you guys to learn more about the mortgage side in the negotiation process. So I want this to be as interactive as possible. Let's start with just some basic terminology. And by the way, different professionals may have a different response to this. So it's not necessarily like one right or wrong answer. Let me just turn off my notifications here so it doesn't look like I've got something else going on. Okay. Um, does anyone want to chime in the difference between a pre-qualification and a pre-approval? Idea. What's the difference between pre-qual and pre-approval? All right. Well, I'll take the first one then. And by the way, let me just back up. My name is Joseph. I've been tasked to lead LoanDesk. I've been in the mortgage industry for 12 years. I used to run a company called Sellfy.com. And I was a top 100 mortgage broker in the United States 2 years in a row. Really, my passion is about educating consumers to obtain financial freedom sooner, and I believe real estate and therefore mortgage could be a value add in achieving that. So here's now to the question: pre-qual versus pre-approval. So pre-qualification, in my opinion, is hey, you had a conversation with a loan officer and they said, "Oh, my income is X, my assets are Y, and my credit score is Z." And they're like, "Okay, sounds good. You're pre-qualified. Boom. Here's a letter, and you can submit that, with the offer, or go with the, or do what they may, maybe get into the home if that's what's required." Then you have pre-approval. And pre-approval is a little bit more in depth. So there's an application where the borrower has submitted their information, and there should be at least a soft credit check. Now, the difference between a soft credit check and a hard credit check is that a soft credit check does not appear on your credit as an inquiry. And so borrowers like that because they're protective of like not having as many inquiries on their credit as possible. There can be some, depending on like the soft check method. So some lenders might only check with one credit bureau, and so that could be a potential area that trips up the loan. But in general, a soft check is a reliable way of seeing someone's credit. And so then they go through that, and they take the letter will take the information that was submitted by the buyer, and then run automated underwriting And essentially, there's government-sponsored enterprises that really dominate the mortgage industry. They buy all these loans from all these lenders. If you ever wondered why you can have so many lenders exist, well, it's really because the government kind of props them up by having government-sponsored enterprises, and they buy the mortgages. And so these government-sponsored enterprises have underwriting systems. So for example, Freddie Mac, which is a GSE, has a underwriting system called Prospector, LP. Fannie Mae has Desktop Underwriter, DU. So you can run automated underwriting system, and you can see, okay, what the results are. You get approved eligible, and then many lenders stop there. That is their pre-approval. And this has led to the advent of automated pre-approvals. Has anyone seen any advertisement for like, hey, get pre-approved in 3 minutes or 4 minutes? If you have, this is what they're running. So the client goes in, they input all their information, they run AUS on the back end, and then they spit out an automated pre-approval letter based on AUS. And so that's how they're doing it in 3 to 4 minutes. How it's an automated pre-approval. Exciting tech, but there can lead to some problems there. So that is the difference between pre-qualification, pre-approval, the thoroughness of it. Now, in my opinion, there's a one step further on the scale. So you have a client, and they want to basically get their financing in order before going into contract, which all clients should be doing if they're not a cash buyer. So you have a pre-qualification, hey, conversation with a loan officer. Sounds good. Here's your pre-qualification letter. You have a pre-approval. Now they're doing more of an application, submitting credit, running AUS, pre-approval letter. Then you have a third one, which is, in my opinion, is the most thorough. And I call it a validated pre-approval. Okay, so you get that same pre-approval, but how do we know that all the inputs that the buyer put in are correct? Well, we need to validate it based on documents. The reality is buyers make mistakes all the time on their initial application. So I'll give you an example. A buyer puts that they're an employee, but they're actually a 1099 contractor. That makes a huge difference in the way that income is going to be calculated. So a validated pre-approval is you take that application, you request all the documents just as if the buyer was already in contract. So obviously you're not going to order the appraisal or like insurance, but hey, you can pretty much do everything else. And then you get with the actual underwriter, the decision maker on the file, and you have them review those documents and confirm that this is what the client can qualify for. And that is a validated pre-approval. Now, the reason why I bring up this validated pre-approval is because at Sellfy.com, which is was a internet mortgage company, we would compete against other internet mortgage companies, and the other internet mortgage companies run that more automated pre-approval, and I would have to explain to the client why it's so important for them to get a validated pre-approval, and how it actually helps them in delivering a faster loan and less stressful experience. Because the reality is that the client may not want to go through all the hoops. Like, there's a hoops that have to be jumped through when you're applying for a mortgage, as there should be. You're getting whatever, $500,000, $600,000. Okay, you gotta provide some stuff. Well, if you're not in contract, but you're going through a validated pre-approval process, you got to go through all those documents. You got to get the bank statements in. You got to get the pay stubs in. You got to get and if you're self-employed, tax returns. There might be more documents that are required. So you get new documents that trigger additional documents. But if they go through all those steps, then at the end, you have essentially underwritten the loan. The loan is already underwritten, and now all that's needed is third-party items, title, insurance, appraisal. And that, in my opinion, creates a very attractive client to submit an offer because they can close quickly. You've already kind of done the hard work of getting everything set up. And so this is where I'm hoping to learn from you, because I, again, have had to educate clients often about this, the power of getting everything done beforehand, as opposed to trying to, just get a pre-approval as quick as possible and then collect documents. And so what I will do is, I will write a letter and I will explain all the steps that we went through to get this validated pre-approval. So then that pre-approval letter that goes to the listing agent, they know, okay, this is actually like a well vetted client. And the reason, and part of the reason why I did that is self-interest, because uh, people haven't heard of my company before. So if you don't have like strong brand recognition, you have to be able to do things differently to make the offer stand out. So let me maybe get a temperature check and learn from you. So when you're negotiating, uh, with the listing agent, how often does the financing contingency come up, and do you ever get in depth as far as the qualifications of the borrower and the strength of the pre-approval? Does anyone want to chime in here?
I'm not an agent, otherwise I would chime in here.
Well, what
But
I'll
I
say, can you hear me? Hey, Joseph, how are you?
I'm well. How are you?
I'm good. I will say, if I was approaching a listing agent, typically we don't discuss buyers' credibility. Usually that comes in for me, like just send over the offer with a pre-approval letter, as you're saying. And that usually gets that done. The only time contingencies really come up with the seller is if my buyer does have a contingency, such as I got to sell my home before I can buy this home. Then we'll talk about getting into further detail as far as making my offer look more attractive, since I have a contingency. But no, can't say that in my 20 years I've ever actually had to talk to a Elder Presley Farm listing agent about their qualifications. Usually that pre-approval letter when I send it over does that for me.
Yeah, and do you believe that all pre-approvals are created equal, or
I mean,
has
absolutely not
that been?
right. I mean, it's not done until the fat lady sings. So that letter is not worth the paper or the ink that it's written on. So totally get that. And then I guess that's what they call like retail, but just seeing a bank pre-approval versus a small loan company or a mortgage company, unless, like you said, you do have that branding, because that brings credibility to the table as well. You're like, oh wow, she's approved with Wells Fargo. They're going to give her 100% of the loan. I mean, those details. If you're really looking at the pre-approval, what I have actually gone and done is call the lender that's on or the mortgage broker, whoever's brokering the
Yeah.
deal, and verify that qualification. And how far are we in the stage yet? Have you done the second third pull yet? Do you have all the documents in? Just if I wanted to vet them to make sure that they are on point and this loan is on track to close on time.
are you able to make changes to the pre-qualifications before it or after it's issued? Like if a client's circumstances changed, would they be able to modify the pre-approved amount or any other details? Or is it once you get the pre-qualifications, that's the amount that you are approved for, and that's that?
So I've worked with agents who have different preferences, and I try to cater to their preferences. Some
Mhm.
agents want the pre-approval to really match the offer. So if they're offering $1 million and a $800,000 loan amount, they want to see like basically that's on the pre-approval, as opposed to maybe that client actually qualifies for a
Mhm.
$1.2 million loan amount, and that's just the max loan amount that they qualify for, and say, here's your pre-approval, and you can go, submit this with your offers. And in general, I like to have an open communication with the agent on offers, because sometimes we're really pushing the limit on the debt to income ratio on the pre-approval. And then the property itself may have some complexities that would change that pre-approval. So
Mhm.
if it's a townhome and but we had pre-approved for a single family home, well, now you have an HOA due that needs to be factored in, or maybe there's a solar lien that they're going to inherit, and that's now going to have to be included in the pre-approval. So I really like to actually, anytime the offer is going to be submitted, especially if I feel like it's kind of close, we're pushing it. Um, let's look at the property and make sure there's no changes in the market, and make sure that the pre-approval for that specific property is still validated.
And can you is it beneficial to seek pre-approval from multiple lenders, or do you just kind of from, like, a client perspective, is it traditional for them to stick with one lender at a time?
Well, I think it's always good for a, a home buyer
Mhm.
to initially talk with at least three different mortgage companies, and they
Mhm.
should probably look at companies that have like different models. So maybe talk to a bank or credit union, talk to a mortgage broker, talk to a retail lender, maybe even talk to a call center, like more internet type mortgage company, and just at least have the conversation. Now, unfortunately, a lot of those companies have very aggressive like sales scripts, and they don't make it easy to just access information as far as interest rate
Mhm.
payment, but it's starting to become a little bit more transparent. Ultimately, though, that will give you a sense of where to maybe apply for pre-approval, and it's also product specific. If that's maybe a well qualified borrower, but we see folks all the time who will not qualify for a loan with a bank that would qualify with LoanDesk, whether it's a like Cal HFA or even a low credit score, like 580 credit score, that
So
borrower
you
can
use
qualify.
LOS? You use LOS?
LOS,
Yeah, you're in
loan origination system.
yeah.
What's the what?
So it's like my back door to every lender that I am looking for if I'm shopping for a client. Um,
So there's a few software
mhm.
designed for mortgage brokers, but there's not one that scans every. Those are the ones that work with third-party originators. So like Loan Sifter, maybe is it Loan Sifter that?
I know of Sifter. I haven't
Uh,
used it yet. I'm
okay,
brand new on that side.
yeah,
Um, but I'm loving what you were just saying. I can put in a query the credit score or if they're the type of loan it is, VA, FHA, then it's gonna
yeah,
bring every lender that's in the network, and that actually will meet those qualifications. So
yeah.
you can put in the credit score, you can put in the type of loan, and then it'll bring up me a list of lenders to try to shop for my client. I think that's what yeah, how they
Yeah, I, I just want to be, clear, because like with Loan Sifter, if you're, like if you have 40 plus lenders, like I made the mistake. So like when I started my company in 2018, I got signed up with like 30 different lenders. And I'm like, hey, you're all going to compete against one another, and whoever's lower, that's obviously better for the clients. Like this competition. But the reality is, a lot of those lenders, their service is subpar, and then you almost take like a reputation risk if you use a lender that is not able to deliver. And so once I kind of like narrowed down like who the best lenders are, my business took off,
Mhm.
because it was just much more simple.
I'm
Even
seeing that I have you have access to all these lenders, but I'm seeing that developing relationships with particular lenders. So you know their parameters, you know what their scores are, you know what they're going to be looking for in underwriting, so that you can actually help your client by hitting those things off, or like, well, this isn't going to work for you automatically. It's like knowing that sheet of music beforehand.
yeah, Yeah, but really, I find the key because I started this program called Self-Fi Second Look, and basically, and the idea was to try to get as many folks who had been rejected by a different lender to say, okay, we'll give you a second look, and like it was wildly successful where like cannabis employees who had been turned down by Bank of America because they worked in the cannabis industry, or folks who went through the automated pre-approval process because they're tech savvy and they're like, oh, I'm gonna just do this, but then they didn't realize, oh, you can't use your RSU income, and therefore it's this, and then we have to find creative solutions to make it work.
How do you look?
Um,
They call it dip shifts, shift dips. I'm learning. Like overtime with clients works, and they get regular overtime. Do you calculate
it
that? How do you calculate that into their income when you're deciding their DTI?
Yeah. Well, I could send you a kind of like the specific guideline for that. But just to kind of stay on topic about the pre-approval, uh, Aaliyah, you had asked about when a client should shop. If the client is serious about getting the lowest rate at the lowest cost, they kind of need to shop twice. So they need to shop for the
The morning.
pre-approval process, and they need to basically um, uh, you know vet. And in my opinion, they should shop with like different types of mortgage companies, banks versus broker. But then also once they go into contract, they should shop. So the CFPB released a study that basically determined that 76% of mortgage applicants only received one loan estimate, meaning they didn't get a second. So this loan estimate is this document that is basically standardized from all mortgage companies that shows a breakdown of the fees and cost and rate. And the whole design of the loan estimate is to enable the consumer to easily compare, to shop around, and to basically enable the consumer to get the best possible deal. This is the CFPB. It's all about protecting the consumer. And they did a study. They're like, whoa, like this has totally not worked and backfired. The consumer is only getting one loan estimate. And the reality is, if the consumer is really serious about getting the lowest interest rate, they kind of also need to shop at the time of contract. But they also have to preface to any lender like, "Hey, my contract date is X, so like if you cannot hit this, with like certainty, then it doesn't even matter because at the end of the day, it's about getting the home. That's the most important."
So they're not even doing what they were supposed to, because if they're supposed to be comparing lenders and whatnot, if they're only giving one version,
Correct.
it's
Well, maybe they're happy with their loan officer and they're ready, set, go, and they don't feel like they need to shop anymore. Most clients aren't actually educated on how fast the market changes. They don't know that you need to check uh, 3 times a day for the rate because whenever it's going to hit. They don't know and sit back and listen to the feds and predict what the rate's going to be. So they're really leaning on us, the professionals, to show them what's what. So if we give them a rate and you say this is what's good, they're going to trust you to be their fiduciary agent. So with that being said, once it's like when you get me as an agent, you're not looking for another agent. I've already shown you the house. We're walking through this process. We're not making any changes. We're not
yeah,
pulling out. I'm your girl. And so now I'm your girl on both sides, whether it's the mortgage end or the real estate end. So I think it's really just handling your client, taking care of your client, not giving them a reason to go shop around. Because at the end of the day, we're all salesmen and we're all here to take care of our clients. And yes, getting him the house at the end of the day is the goal.
absolutely, well, so is your background also in mortgage? You seem to be very knowledgeable about a lot of these things.
Just about 2 weeks ago, passed the NMLS, the safe exam.
Oh,
Yeah.
congrats.
Oh, wow,
Have you talked
congratulations.
to Joel about anybody at Radius about doing mortgage or?
I have not, but I know you guys are in California and I don't have California.
Oh, where are you based?
I'm Georgia,
Oh,
Florida,
okay.
Oh, I see.
Alabama, Louisiana, Southern.
Nice.
I'm down south.
Yeah.
You're down in the
Southern
south.
drawl.
A
So
southern gal.
Here's a question. Do you feel like there's anything that the loan officer can do to like move the needle in the negotiation when submitting that offer? Like if they wrote like, like a personal letter, say, hey, like this, this loan is, as good as gold. We've already, gone through X, Y, Z. Do you think that would move the needle in the negotiation? Like, if the seller is comparing, multiple offers.
Um, I will say that I have a new respect for loan officers now, looking at it from the other end, being the agent, not knowing what's going on, not being able to see what you can see with the loan officer hat. So I will say that. And there's a lot more information that's on the other side that we don't see. So as far as making an offer more attractive, again, the letter itself, um, there's terms to everything. Um, Close time, knowing that someone got a really good rate also kind of tells you that they're probably more likely to sure to close. Either they could afford to buy the rate down to make it happen. That maybe says they're a little bit more motivated to sell, or to move rather. So I don't think there's really. I mean, the mortgage side kind of is black and white. It is what it is. I mean, it's down to the numbers, the DTIs, the percentages, following the rules, the time period. So I mean, it's like a flow chart. So it's not much more, I would think, that a loan officer could do. I know you said like writing a letter. I've had buyers to do
Yeah,
that.
or call the
There's
listing
multiple
agent because I'm actually sometimes surprised that like the listing agent because that that they don't call. Like if I were the listing agent, because now I've like know this how the sausage is made on the mortgage side, I would always call the loan officer and I would basically ask them, hey, what's the process of this pre-approval? Did you get all the documents? Have you seen the
Mhm,
bank statements? Are the
mhm,
funds in the account? Like
mhm.
just kind of the basic statements
Check
because
them.
because for the LO, especially like right now, everyone's trying to, get business. They're like, oh, okay, let's just get the pre-approval, even though the money's coming in later or whatever, and so I think it's really important actually, and I think someone had mentioned this to actually vet that LO, and if that LO was basically didn't have the documents, and if I'm the listing agent, that would be a serious strike on
Flag.
that offer.
Yeah, definitely a red flag.
Okay, well, I think we're coming up to our 1 o'clock time. Went flew
Yes.
by. I really
4 o'clock
enjoyed.
my time, and I have another Zoom at 4. So it was great. I'll catch on a meeting soon. And Joseph, I'll send you an email.
Okay, yeah, I look forward to that.
All right, sounds
Awesome. Well, thank you all so much for coming. It was great talking with you guys for this session. Thank you so much.